quite positive. In fact, it's a good almost 35% of a jump up is what they've seen on their NII. The consolidated profit is well higher by roughly about 42%. And you can see that spike up come by in the stock, 2.25% higher fire rate as we speak. We'll, of course, get in more details on what the numbers actually entail and how the quarter gone by was. But let me welcome on board Mr. B. Thyagarajan, MD Blue Star as well, and talk about how their quarter has been so far. Mr. Thyagarajan, great to have you on the show. And let's talk about the festivities with the GST cuts now on ACs, particularly reduced from 28 to now 18%. What's the festive season building up so far like? How's the demand been?
Good morning, Aisha. Festival greetings to you and your audience. It's a pleasure interacting with you. From 22nd, actually the demand is very encouraging. I'm confining myself from 22nd of September for the simple reason from 15th of August till 22nd of September, nothing happened really. So while one can say it is due to pent-up demand, but on a like-to-like basis, if you are to account from September 22nd till date, and I suppose this will accelerate as we build towards Diwali sales, it is more than 20% growth. That is encouraging. And having said that, whether this will compensate for the loss of sales due to poor summer, you wait and watch for the other windows that are available to us going forward.
Mr. Thyagarajan, hi, this is Harsh here. Good morning. Great interacting. Let me first start off by getting your sense on the sustainability of this. You're obviously seeing a pickup from 22nd September on, but we were speaking with a retail sales company last week, and what they seem to suggest is, and basis interactions with customers, that Q4 FY26 onwards and maybe H1 calendar year 2026 will be a blockbuster year for air conditioners. This is obviously on the back of GST plus the fact that the summer will likely unwind much more in a much more stronger fashion versus last year, given that this 2025 calendar year has been more subdued in that sense.
Harsh, good morning and greetings to you as well. So this is like T20 cricket. So you are somewhere in the 11th over. So you are not going to be saying that 19th and 20th I will score, nor the markets are going to wait. So the anxiety will be whether the GST reductions have translated into higher demand. That is the first part of it. The second is the aspiration and what we would like to end the year with. If you recollect, the degrowth during the summer season was more than 25%, and one wanted to end the year despite that with a 10 to 15% growth. Right now, the anxiety will be how the full year will end. There are enough windows there. So the first window is from September 22nd till Diwali. Then it is going to be December building up to New Year, not necessarily for the New Year sales, but because there is going to be energy label change. The third window is going to be February and March when the summer season is going to happen. So it is exactly that three windows will have to determine how the industry would have ended, how Blue Star as a company would have ended the financial year FY26. As of now, the indications are, you're right, the retailer's assessment is, I agree with that. It will have to be a great season ahead going forward. And I think still 15 to 20% growth for the full year basis is something the industry can attempt, and we will be in line with the industry or better than the industry. But right now, we had a bad summer season. Then August to September 22nd was a washout. Post September 22nd, building a to Diwali, it is good. Whether it is online, whether it is modern retail or regular retail, it's all happening. We have to wait and watch.
So you're being relatively cautious, if I can call it that, because 15 to 20% industry growth largely was penciled in at the start of the year, financially, if I can call it. You had pushed your guidance at 20 to 25%. Would I be correct in assessing that you will be now either closer to the 25% number or you might well exceed it, given the kind of push that the government has given to both industry as well as the consumer?
As I mentioned to you, it is that last couple of overs, February, March, and if the weather conditions are going to be harsh and the predictions are the summer is going to be tough, it will be blockbuster month. We have seen it again and again. We saw it even last February, March. You will run out of stocks. That kind of things takes place. You see, that is the nature of this industry as of now, but equally, I'm also betting on the energy label change. There will be people who would like to buy before the energy label change. There will be people who would want to wait for the energy label change and then buy the new energy labeled products. And most importantly, I think the industry has maintained the prices very stable even before the GST cut. The prices are still attractive. Attractive consumer finance schemes are there, and finally the replacement market is beginning to take off. And I think we will have around 50 million units in the market which are more than 7-8 years old, and I think it will open up.
Right. Mr. Thyagarajan, last year I just wanted to understand, the compressor shortage which we talked about when we were last speaking with you, and B, the volatility in copper prices. Tell me, how do these two function and how is it that you're mitigating the impact, if any?
Your memory is very sharp, Aisha. Yes, the rush in February, March was there will be a compressor shortage in summer. The dealers ended up stocking. But I think the compressor supply chain is stable now. I don't think there is a concern. We all have learned to plan it out in an efficient manner. The trick now is, what is the sale that is going to happen before the energy label change and post energy label change? So it's you have to monitor on a weekly basis and plan the inventory, but I don't think compressor is an issue at all. As far as copper is concerned, the domestic ecosystem is coming up faster. They are accelerating their efforts, whichever is the player who wanted to enter this market. And the imported copper tubes, multiple sources are available for doing that. And the industry direction, our direction is how fast we will indigenize the entire component ecosystem.
Okay, and capex plan on track, sir. 650 crore FY26. Is that pretty much on track?
Again, here there are two things. One is thanks to the GST cut on cement. I think civil construction cost will come down. That benefit accrues to the investors like us. Number one. Number two is it is exactly the room air conditioner capex planning. So you will have to make an assessment. What will be the market size in FY27, 28? We have faith in the long-term growth. That is 19% CAGR for the industry is very much on. There are 1 or 2 quarters which may be bad. That is fine. That is part and parcel of the game. And we are clear. We are building the organization for the future. It's not only manufacturing capex. It is research and development capex or the digitalization capex. We are on track on that.
Okay, Mr. Thyagarajan, great speaking with you today, and here's wishing you and your entire team from all of us here at ET Now a very happy Diwali in advance.
To you, Aisha and Harsha, all the best to you and your audience.
Okay, thank you. you so much. On that note, we're going to wind it up right here on this edition of the market. Completely out of time, but it's a goodbye from Harsh and me.